So Palantir has been popping lately. Oh, and a little bit off topic, but I've been having these goofballs in the freaking comments where I fucking love these niggas. They be so fucking funny, I swear to God. But yeah, for all you niggas that love being goofs, straight just logging myself, watching videos that help me feel more confident in the trades that I take for my own personal gain. This is no financial advice at all by any means. It's simply me logging my hours. Is just, I post for my pleasure. You know what I'm saying? If you learn something from it, I'm I'm, I'm happy from that. As you can see on my pages where I be gaming, I be doing all sorts of stuff, bro. But yeah, Palantir, they've been popping. That's why they're the reason why I'm up today. Um, yeah, let's see this.
Palantir and Microsoft are teaming up, claiming their partnership will boost AI adoption across the US government. But what's really going on here? We're talking about Palantir's data analysis skills joining forces with Microsoft's cloud power. It's like putting a genius brain into a supercomputer body. And here's what's keeping investors on edge. How will this move change Palantir's standing in the defense tech world? Will it give them an edge over competitors? Or is there more to this story than meets the eye? So what's next for Palantir? They need a strategy to leverage their AI expertise and reclaim their edge in the defense sector. And it looks like they might have one in the works. Palantir has announced a strategic partnership with Microsoft that could redefine the landscape of defense AI and government deployments. This collaboration is poised to supercharge Palantir's AI capabilities, leveraging Microsoft's industry-leading Azure cloud infrastructure and cutting-edge AI advancements. By joining forces, the two companies aim to accelerate the development and deployment of next-generation solutions for critical government and defense applications. This partnership solidifies Palantir's position as a leader in defense AI and marks a significant step forward in its mission to drive innovation in the most demanding and impactful sectors. Microsoft's been quietly building an empire in government and defense. They've got their fingers deep in the Pentagon's pie, and it's a lot bigger than you might think. We're talking about Azure Government Secret, and Azure Top Secret cloud platforms. These are fortresses for the nation's most sensitive data. But how does a company known for consumer tech suddenly become a linchpin in national security? It's all about adaptability and scale. Microsoft's been pouring resources into AI and cloud infrastructure, and it's paying off big time. Their intelligent cloud segment grew 19% year over year, with Azure itself jumping 29%. AI services accounted for 8 points of that growth. This massive expansion directly benefits the partnership with Palantir, providing a robust foundation for integrating advanced AI capabilities. Now you might be wondering, what could Palantir possibly gain from Microsoft? Well, imagine combining Palantir's razor-sharp data analysis with Microsoft's massive cloud infrastructure and AI capabilities. We're talking about integrating things like GPT-4 into Palantir's Foundry software and AIP. This combination enhances Palantir's ability to process and analyze data at unprecedented speeds and scales. The partnership details are where things get really interesting. Palantir's suite of products, Gotham, Foundry, Apollo, and AIP, are all getting the Azure treatment. They're being deployed across Microsoft's government cloud platforms, enabling seamless integration of AI systems for various government applications. This means faster, more efficient operations in areas like logistics and contracting. But there's more. This partnership could be Palantir's ticket to a more stable, recurring revenue stream. No more relying on project-specific contracts. We're talking about a potential doubling of Palantir's government contracts. It's like they found a way to secure a long-term steady flow of government revenue. The question now is, how will this actually work in practice? Because merging two tech powerhouses like this is bound to come with its own set of challenges and opportunities. When Palantir and Microsoft join forces, it's like trying to fuse a Swiss Army knife with a supercomputer. The potential...
It's not that what the video was saying was bad. It just pissed me off. I just keep seeing the same shit on the fucking screen. So give me some more. Let me see.
Guys, we have to talk. There are certain stocks that I'm going to cover in this video today that are going to make a lot of money in December. And as December approaches, which is right around the corner, I need you to watch this video before Monday, 9:30 a.m. Because these stocks that I'm going to cover, like SoFi, like Palantir, like Nvidia, I have some news and updates on these stocks and I'm holding them in my portfolio. My portfolio is at $4 million. I'm going to be going over my most influential stocks. So I'm holding Tesla, Palantir, I have PayPal, I have American Airlines, SPY, Nvidia. Let's not waste any time and let's jump right into it. Starting with the first stock, which is SoFi. I haven't covered SoFi a lot on this channel, but I've done a lot of research. And basically, here's why I think SoFi is going to continue to rally, and this is one of the most influential stocks that I plan to actually buy on Monday. So the market is rallying due to a combination of dovish Federal Reserve, all right? Those policies that the Fed is coming out with right now are very dovish, and that's actually going to be a big benefit for SoFi. I'll explain in just a minute. Look, a record $7 trillion is sidelined right now, and that cash is moving towards stock in a big area, and fintech is where the money is moving. Fintech is getting a lot of cash because investors are looking for high yield and attractive opportunity. This market has tons of them, but what is the most attractive? SoFi is set to benefit from falling interest rates, a favorable regulatory environment, which is super important. We know that from Tesla. Regulatory environment is one of the most impactful things on a stock. Also, what's impacting SoFi is tax reforms, and all of this is going to give it a competitive advantage over traditional banks. Now guys, I worked at Goldman Sachs, and when I looked at Goldman Sachs' software and how traditional banks operate their business, I was like, are we in 1990? Like, is this company operating before I was even born? The type of technology that you see at traditional banks is awful. And I think that's going to be a really clear disruption play, and SoFi is going to benefit from disrupting these banks. I mean, it's all about disruption. When a new company, a new competitor comes in and they actually disrupt the market, that's when you get huge market share, and that's when you actually dominate, make a lot of money. So SoFi is basically going to challenge traditional and outdated banks. All right, they're not going to completely wipe them out. Obviously, that would mean that SoFi would be trillions and trillions of dollars. But just looking at SoFi, I'm going to pull up the stock. I'm going to show you. Check how much the stock is up in the past 3 months. I think it's finally blowing up because investors realize that this stock is a really attractive play. Now, I have sold 14 puts and $10 puts. Being honest with you guys, I do not have shares, but at least I show you my entire portfolio, and I'm very transparent about what I have and what I don't have. And I plan to buy SoFi on Monday. I plan to buy it on Monday, although I am very cautious because the price earnings ratio is very high, but the market cap's only $17 billion. I think this company can be a $50 billion company in the next 2 years. And specifically, what I think is going to make a lot of sense is that SoFi is going to dominate in terms of taking market share from some of the traditional banks, but I also think that they're going to be positioned to capitalize on regulatory modernization, okay? I think that a digital first banking trend is very clear in the market. A digital first banking trend just means that, you know, there's like this bank, there's another bank, Chime, there's another bank, Ally. Some of these banks have, you know, storefronts and stuff, but more of these banks are going digital, okay? That means that there is no storefronts. That's not like a, you know, a Bank of America branch where they have branches all over the United States. Becoming a bank that is more digital is actually a genius move, because you don't have the cost of having a storefront. You don't have the cost of having brick and mortar, you know, traditional stores where you have to pay for rent, pay for more employees. And this is similar to like a Robinhood play, in my opinion, where Robinhood is, you know, it's a free app, right? They have certain other costs. I won't get into that in this video, but Robinhood has dominated and has democratized finance for everyday retail investors. And I think SoFi is doing something very similar because they can offer cheaper prices, they can offer better services because they don't have the brick and mortar, you know, storefronts. Robinhood doesn't have stores all over America like, you know, the other brokerages like TD Ameritrade or Schwab. Schwab bought TD Ameritrade. So the potential for SoFi is really big. So I'm going to be buying some SoFi stock when Monday the market opens up. I'm also going to be looking at selling some more put options. I have showed you here that I have a 14 put, the $10 put, but I'm also going to be looking at probably selling some $15 puts. And in a certain way, I don't want to chase the stock up, but at the same time, the momentum trend is so good. I actually think this is a good stock to buy call options on, because if SoFi goes to $20 per share, let me show you the options here, then we'll move to the next stock because I want to be efficient in this video. If you look at the expiration date and I go to, let's say, January 17, and I go to buying a call option, you can actually get a really interesting action here on the 15. So I was looking at the 15 this morning. It's a 67 delta. This would be an in-the-money call option. This would be worth $2, so you would have to spend $200. But check it out, if SoFi continues to move up and it goes to $20 per share, you're gonna have $20 minus the 15 strike price, which is $5 that you're in the money. So you're spending 2 to make 5, right? Boom, right? That's what you will do if you are also bullish on SoFi. There's no need to sign up for any master classes or free webinars. I'm just giving you guys all my ideas for free. My free content is better than people's paid content. So just being honest with you. SoFi, I'm bullish, and the best way that I would play this is either buy some shares of stock and dollar cost average into it. Number 2, I would sell puts at 15 strike price for January 17. Number 3, I would use a small amount of capital and actually buy an in-the-money short-term call option, which I haven't really covered on this channel much, but basically that short-term call option gives you all that movement to the upside. It gives you movement to the upside on a high delta with only investing $200. So that's the play. Now, the next play that I want to talk about is going to be Palantir. I'm going to go jump back into my portfolio here. And guys, Palantir, its current PE ratio is freaking high. It's high as my biceps right now. But, you know, if you take a look and you try to understand Palantir from a business perspective, look, this is aside because a lot of people get this wrong. Palantir is really misunderstood. The high PE ratio does not matter. It doesn't matter because a lot of people that are skeptical and saying that it's overly expensive, were those people also saying that Amazon was really expensive, or that Tesla was really expensive, and Nvidia was really expensive back in its growth phases? Maybe, if those people were even investing. Because most of the time, those people lose their shirts and quit altogether. But that is the same type of person that also looks at Tesla, Amazon, and Nvidia and says, oh, it's too expensive. I'm going to be in my SPY only, which is fine. SPY can also make you money, and I'll talk about SPY and what I think the market is going to do in December in a few minutes. But look, if you want the big results, you need to go for something that has potential to give you big results, which is Palantir. Palantir solutions have been also proven, by the way, guys. I do pay attention a little bit because I'm out in Eastern Europe. Palantir solutions have been invaluable for Ukraine and the Middle East, right? The two wars going on, the situations that, I can't believe our world's still in war these days, but the war is happening in Ukraine, Middle East, and Palantir, looking at my research here, they're showcasing rapid deployment capabilities in active conflict zones, okay? So Palantir is a big, you can call it a help, you can call it a contributor. I don't want to get into politics, and I don't really pick sides. I don't care. To me, Democrats and Republicans are the same thing. They're just both trying to get your time and your money and your attention. I know they have different opinions, but it's the same thing, right? To me, because it doesn't really matter. It's all what we can do rather than paying all this attention to politics. Look, without getting political, Palantir is going to make a lot of money. Palantir's AI solution are going to be very helpful because I was taking a look at the research, and it's a little bit sad, but modern warfare is going to probably continue, unfortunately. There's probably going to be conflict and differing opinions, how different cultures, they don't agree with each other, and there's conflicts, right? So what's going to happen is that there's going to be a lot of conflicts that are going to be cyber, okay? Conflicts and warfare are shifting to cyber and AI-driven strategy. So war is going to be kind of AI-driven. It's going to be more technologically driven. And Palantir is positioned as a leader in basically, being a solution during these wars, which is, for better, for worse, or for whatever, not picking a side, is going to make Palantir a lot of money. It's going to make Palantir a lot of money, and that's why analysts like Dan Ives describe Palantir as the Messi of AI. All right, it's the Messi of AI. They are innovating. They're certainly very valuable on the commercial side. They're very valuable on the government side. And for me, Palantir is a position that I'm going to continue to hold. Obviously, I've been early in this play, and I don't want to spend too much time on it because my position is really clear. Let me show you what my position is. Actually, I have a couple positions at Palantir. 45 covered call, which I need to roll up. If you want to watch a rolling video, just type Invest with Henry rolling on YouTube. I have a Palantir 50 covered call. I also need to roll this up. And then the rest of my shares are actually uncovered. I've been smart enough to not sell covered calls on my entire shares. So I have 5,100 shares at $65. The stock's at $65 right now. My average cost is 21. I made $222,000. I also have more Palantir in my other portfolio. I have two portfolios, so I don't have too much in one portfolio. And I've been publicly tracking all this. So if you guys appreciate all my transparency here, all you can do is subscribe. no free master classes, no Discord stuff. You don't need that stuff. I have that if you want additional help, but you don't need it. I'm here to give you everything for free.
71.
My next play is going to be Tesla. I did cover in my video 2 or 3 days ago on Tesla, essentially buying a 330 leap. Guys, 330 leaps right now are the move for Tesla. I'm going to just say one sentence, and then we're going to move on from Tesla. Autonomous. The autonomous play, I could argue, guys, that is the most undervalued part of Tesla. So the market isn't really pricing it in fully because there is obviously risk to autonomous not working out, regulatory issues. But in my opinion, autonomous is the most undervalued part of Tesla's business. And this week, Tesla can't say is for sure, right? I don't know, but I'm pretty confident that Tesla is going to pump up. The reason why I think it's going to pump up is Tesla's actually had a really interesting move recently on the technical chart. Like when I was looking at Tesla, after this huge rise, right, we had kind of like a peak at 350 and then another peak at like 352. We've pulled back, but you can already see the market's like, no, I want more Tesla. And I was taking a look at the volume. The volume is very indicative to me. And the technical analysis is very indicative to me that Tesla is going to move higher. So I think that we have a little bit of a short-term dip from the 350 range down to 330 range, but I can see the stock going back up to 350. So that's why I don't have any covered calls. You can see here I have 300 sell put, 220 sell put, 200 sell put. I'm up $7,800 on the options, but I'm not selling covered calls because I am still bullish. Okay, I'm still bullish. I have 1,000 shares. Average cost of $218 per share. I am still bullish. 300 leap option. My leap option will go out to September of 2025. Okay, so go ahead. If you want to own Tesla, buy shares. If you want to put money to work without having to put up a lot of capital but get upside on Tesla, go with the 330 leap option. Just check out my channel. I already went over a full video on why I'm doing the 330 leap option. Now let's move on. Next stock I want to cover that I think is going to be interesting for this week is NVIDIA. NVIDIA has been pulling back as well, very kind of similar to Tesla where it has reached, some really nice highs. But now the stock is pulling back towards the 135 range, and I'm going to be selling 130 puts. Let me show you here. Let me show you the NVIDIA chart. NVIDIA has pulled back from about 140s down to 135. Pre-market.
Boy, NVIDIA me fucking playing around. Why?
But for me, I'm going to go for 130 sell put. I have 132 sell put for 12/20 expiration. You can actually go for 130 or 132. Either way, I am bullish on NVIDIA, and I want to look for entry into NVIDIA. More NVIDIA shares. Why? Because NVIDIA is one of the best AI plays, and I've already made a lot of videos on NVIDIA. So we'll move on, but you should probably know why I'm bullish on NVIDIA. Next, SPY, guys. Before I cover the last two, SPY and SMCI will be the last one. Something interesting there. I'm bullish on SPY because I think as we have a new president that is going to be entering office, I'm bullish on the Republicans doing very well. Although, we're going to get some more money printing, etc., the stock market will do well. Mark my words, we're going to have a very strong 2025, and there's a huge opportunity here in the next couple of months to make a lot of money. So I'm just bullish on SPY in general, and SPY market I think will go up about maybe 2-3% or so in December. And then into January, we're probably going to see a further rise because there's something called the January effect, where stocks do tend to rise in January. So look, SPY is good. Now the last stock I want to cover is going to be SMCI because I want to put out a big warning for you guys. All right, SMCI is a gambling stock. All right, it's a gambling stock. There is no reason to own this long term, and if you have a few bucks to throw away, you probably have a 50-50 shot of winning on SMCI. I don't know about you guys, but I'm not into 50-50 bets. I don't like flipping quarters. I like having an edge. I like to have a high win rate. I like to have a high probability of success. I'm not following SMCI closely, and I purposely will not invest even $1 into SMCI, and I think this company is just not a good company overall. I don't like following hype. I like to make consistent, safe, passive income. So I don't care if the stock is undervalued. I don't care what people think about in the short term. What's the point of trying to trade the crazy volatility on SMCI and try to make money 50-50? This company is trash in my opinion, so there's no point of investing. Save your money and invest safe. Last thing, I want you guys to go ahead and check out this video. It's not a popular video, however, it's a really boring, will not invest even $1 where stocks do. Before I cover the last two, SPY and SMCI will be the last one. On SPY in general, and SPY market I think will go up about maybe 2-3% or so in December, and then into January we're probably going to see a further rise because there's something called the January effect, where stocks do tend to rise in January. So look, SPY is good. Now the last stock I want to cover is going to be SMCI, because I want to put out a big warning for you guys. All right, SMCI is a gambling stock. All right, it's a gambling stock. There is no reason to own this long term, and if you have a few bucks to throw away, you probably have a 50-50 shot of winning on SMCI. I don't know about you guys, but I'm not into 50-50 bets. I don't like flipping quarters. I like having an edge. I like to have a high win rate. I like to have a high probability of success. I am not following SMCI closely, and I purposely will not invest even $1 into SMCI, and I think this company is just not a good company overall. I don't like following hype. I like to make consistent, safe, passive income. So I don't care if the stock is undervalued. I don't care what people think about it in the short term. What's the point of trying to trade the crazy volatility on SMCI and try to make money 50-50? This company is trash in my opinion, so there's no point of investing. Save your money and invest safe. Last thing, I want you guys to go ahead and check out this video. It's not a popular video, however, it's the really boring but important stuff, and it's the secret option trading strategies to outsmart the market psychologically, which a lot of people are really not into. If you look at the timestamps on this video, I go into the illusion of trading, exploiting ex-dividend dates, early assignment, implied volatility rank, a lot of stuff that I don't typically cover, and I don't typically cover it for good reason. I spent an hour on the video, and we have not that many folks actually interested in this, but I think this boring stuff's important, guys. So check out this video. There's a lot of stuff about overconfidence, false safety risk, consistent.
Posted that October 28, 2024. Posted his video. He did not like that boring shit.
An approach, data-driven examples, anomalies, buying options fallacy, portfolio examples, volatility, and honestly just how to outsmart the market. I think this video is really worth watching, and it's kind of upsetting I can't make content that actually helps you guys. So if you actually want to make money in this market, please watch something that might not be the sexiest video or this once ever opportunity to quadruple your money, but actually get better at trading options. It's like,
I think today was an interesting video. Sorry about the first half, but you'll be able to get over it. You also got to see my account. It's been a minute since I really showed my account. So last time I showed my account, last time I showed my account, like somewhere around this age.
Why not affordability?
Yeah,
As you can see, I have more money than anybody.
that was about 6 months ago. Was there a time before that though? Maybe. Let me see.
Alright.
Yeah, I think it was it that one? No.
Alright. So as you can see, right?
Yeah, you couldn't see because my face was right there, so you really couldn't see. Oh, that was a 256. No. That wasn't a 256. Yeah, I had originally started showing my. Damn, my hair used to be so much shorter, but. I think right here.
These are just different accounts. Like I look at them as big.
Bro, 8 months ago. This one was 8 months ago. March 7th.
Game like account.
So March 7th, 8 months ago, I was at 580. And then my one before my most recent one y'all got to see, which would be, I believe, this one. You could kind of see it. But that's Tesla's earnings.
There was a correction.
Oh, you couldn't see where I'm at. But yeah, exponential growth, boys.